and welcome. You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. I am Agam Vakil. Here are the top headlines that we are tracking at this hour. It's another day, a lackluster trade for the markets. The Nifty trades little change, close to the 10,900 mark. The currency is showing weakness for the second straight day. The rupee has weakened past the 70.30 mark against the dollar. IT stocks are rising owing to the weakness in the rupee. The Nifty IT index is a top sectoral gainer. And Sun Pharma shares remain under pressure despite Dilip Shanghvi's attempts to allay investor concerns.
Well, let's bring viewers up to speed with what's happening in the markets. Thanks for tuning in. My name is Neeraj Shah, and let's pull up the markets. About 0.25% lower or thereabouts for the Sensex. Nifty is about flattish, but the Nifty Bank down about 0.5% as well. And that's in part due to how some of the large, heavy financial names, the likes of HDFC, have corrected. But before we get to that, the mid-caps and the small-cap, the indices should come up on your screen and just show you what's happening there. They've weakened a bit. The small-cap index was up 0.45%. It's now weakened considerably. Now, my suspicion is that the market breadth would have moved tilted just slightly in favor of the decline. So the advanced decline ratio will come up on your screen. As I said, tilted just slightly in favor of the declines currently at about 789 shares to about 729 for the advances. Pull up the heat map and show what's moving and what's not within the index first. Even Stevens, Bharti Airtel, about 2.5%, Mahindra & Mahindra 2.5%. I was saying HDFC, that's one key loser in the session today, heavyweight, and I reckon that it must be amongst the top contributors in trade today. Sun Pharma continues to remain under pressure. So after some time, we're seeing the private sector banks, which had a fabulous month of November, see some pullback from the levels that they are at currently. Even HDFC Bank is down about 1.25%. What's doing well? ONGC and UPL for the better part of the day, they have stayed okay. And Nifty IT hasn't had a bad day in trade. Just quickly want to highlight what's happening at the broad end of the spectrum, because a couple of pockets at the mid-cap end and the NSE 500 are important to highlight, because Equitas and Ujjivan Holdings, both of these stocks, 12.5% for Equitas, Ujjivan Financial about 7.5%. So these two on that UBS note, and we'll talk about that in detail as well. But these two stocks essentially, and let's get the camera closer if we need to, but these two stocks are essentially the ones which are doing rather well for themselves. Some strength for Take Solutions, about 6% higher. 8K Miles continues to rise, but the list of stocks don't quite reflect that much of confidence really for an average investor. The losers, Adani Power sees some gravity, has been rallying for a real long time now. A bit of a pullback there. Bosch sees a bit of a pullback, and last name on the screen, Shankara Building Products continues to grind lower, 10% down in today's session as well. What about the more liquid universe though, Agam? Is it as lackluster, or are there significant movements even though the headline indices may not show too much of a movement?
You know, Neeraj, you've said it. There isn't so much movement in the headline indices, and we're not seeing that much when it comes to changes in open interest either. So I'm just going to start off with your Nifty futures right now. And if you take a look at the accumulation, there's just been about 2% increase in OI, not unlike what we saw yesterday, considering the fact that yesterday too, well, there was very little change in the benchmark indices. Let's take a look at the Bank Nifty and see whether or not there is a drastic change there, because that is where we're starting to see unwinding coming through. And well, it's not really turning out to be a very eventful day when it comes to change in open interest, at least when it comes to your benchmark futures. The India Volatility Index also has come off further, now inching towards the mark of 18, and it could likely go below that mark as well should we see the benchmarks hanging around these levels. But when it comes to your levels based on open interest, currently we're keeping an eye on 10,500. Even though the 10,500 isn't the one with the maximum open interest, the 10,500 put does have substantial OI at this point in time, so as to serve as a little bit of a support. Of course, on the higher end, we're keeping an eye on 11,000 call, and that's where your max OI is. Of course, you do have a lot of increase around the 11,000 put, which means and indicates some sort of consolidation going into the next few days. But we do have that big RBI event tomorrow, and well, things could change going forward. But in terms of stocks, and this is where we're seeing a lot of activity, as you know, as Neeraj already pointed out, the gains in Equitas and Ujjivan. So let's pull up something like an Equitas and see how that's trending. Of course, there is a lot of strength there, up 12% and 29% in open interest. So a lot of longs building up there, and I reckon it's the same for Ujjivan Financial too. So we do have longs there coming through for Ujjivan Financial Services. Let's pull up REC and see how that one is trending. While its underlying is advancing only by around 1.7%, there is a 16% increase in OI. And do remember, Power Finance was strong yesterday, REC is strong today. So this is largely on the buzz of the fact that you could see a merger between the two coming in. Kajaria Ceramics, of course, while its underlying hasn't moved too much, there is unwinding in open interest for this one for the second straight day, if I'm not mistaken. So, well, short covering coming through for Kajaria Ceramics, of course, marginally in the green right now. But mixed cues overall, Neeraj, for today, especially in the broader markets, and the benchmarks as quiet as ever.
Yeah, and you know, let's talk about some of the pockets that get impacted as a result of what's happening to crude and traffic in general. So let's start off the show with the talk on the aviation space. ICICI Securities has come out with a note suggesting short-term incremental demand rising 20%. However, it expects a slowdown over the long term. It is betting on industry leaders like Interglobe Aviation or Indigo to probably make the most of this uptake. Let's discuss this and more with Ansuman. He's the aviation analyst at ICICI Securities with us on the show now. Ansuman, good having you. Thanks much for joining in. What's the genesis or what's the thesis of this product? Short-term traffic growth which might help carriers, and over the long term only the more efficient ones will survive?
No, we actually, this product that talks about the capacity which is coming up. So if you see, traffic growth in India kind of mirrors the capacity growth. So in terms of the aircraft orders that are lined up over the next 10 years, if you see the individual order book of every airlines and do that kind of summation kind of an exercise, you will find that the short-term traffic growth is, if it mirrors the capacity growth, will be around 20%. However, the order book driven capacity growth will slow down to around 12 to 13% range between 2022 and 2025. So that's where your traffic also would slow down. In general, it would mean that yields will start improving during that period of 2022 to 2025. So all the despondency in the sector because of lower yields is because of this higher traffic growth in the interim period. But if you see, the traffic growth has a sense in the sense during 2022 to 2025, you would have a lower traffic growth, and hence your yields should be better at that point.
Okay, but Ansuman, how are you reading the other headwinds at this point in time for the industry? And I know one of them is crude, considering so much volatility. How are you factoring in the matter of crude into, well, what can be a repercussion for the income statement for a lot of these aviation companies?
Right, so crude is playing an important part. So right now we are factoring in crude of around $70 per barrel and currency at around 70. Based on that, we think that the Indigo and Spice will be able to sustain operations and also grow profitably, whereas companies like Jet Airways is finding it difficult, and they would require further lower crude to sustain, barring their immediate insolvency issues, which is something separate. But having said that, if crude were to stay at around $60 or significantly lower, then obviously the airline industry will again ramp up into profits, something which we have seen in between FY15 to FY17. We can see a similar kind of event flowing in. But however, a well-capitalized player like Indigo, stands to gain market share when you're typically a crude scenario plays out and competition kind of weakens. That we have seen in calendar year 2018. So in essence, to spur the traffic growth and to keep on having this good passenger number, we would require the support of lower crude in the interim period, where you have this 20% plus capacity growth.
Okay. And which is why I believe you guys have upgraded Interglobe Aviation from a hold to a buy. Now, One, the industry dynamics and how they work in favor of Interglobe Aviation. Two, the question would be on valuations, Ansuman. How does Interglobe Aviation stack up vis-a-vis the others? I mean, there are only two and probably only one other in which people can take a safe investment call right now because there's no event risk.
Right. So in terms of multiples, we give airlines, we value airlines on an EV by EBITDA basis. So we continue to value Indigo around 8 times EV EBITDA and Spice at around 7 times EV EBITDA. Having said that, in terms of the earnings, it is so volatile and it's so dependent on cost parameters, especially when your fares are going down, that your valuation multiples also tend to be very volatile. Having said that, globally we have seen that good quality airlines tend to trade at around 8 times EV EBITDA in terms of LCCs in emerging geographies like India. So we stick to our multiple of 8 times EV EBITDA for Indigo and 7 times for Spice. So based on that, our target price for Indigo was around 1015, and for SpiceJet it was around 86. So we are not yet factoring the entire crude benefit of 60. As I said, I'm still factoring around 70. So if your crude remains sustained at around 60 levels or less than 65, we can expect to see some kind of upgrades to that number.
Ansuman, I take that seasonally the third quarter is supposed to be a relatively stronger one for aviation companies considering holidays. What are you factoring in with respect to earnings? And I know this is early days. We still have about 20 odd days to go before this quarter ends. But so far, how is it looking?
So yes, you're right. The seasonally Q3 is a better quarter, and 2H typically tends to be better than the 1H. There are several number of elements which are playing out in the second half. One you have this some kind of a capacity moderation or restructuring in Jet Airways going on, which can give you some positivity in terms of yields for competition. But also there is some element of fares being dumped at certain lower prices to get some working capital cash flows. So all those elements are being playing out, but definitely it should be better than 1H. If you see, some amount of media reports have come out comparing that there has been some improvement. But I'm sure YOY still your crude is very high significantly. So the entire benefit would not be, airlines would not be able to pass on the entire benefit. But incrementally, some amount of strengthening in fares should be seen.
You also mentioned that higher international mix is expected to gain momentum. Can you tell us a little more about all the airlines which of course have an exposure to international markets, how you are reading cues here? I'm not sure if Interglobe Aviation does have international ops, but Jet and SpiceJet do.
No, what I meant to say was that there are 3 airlines at least who are kind of on the verge of starting international operations. Go Air have already started. You have AirAsia and Vistara also almost eligible to start international operations. Even Indigo has come up with several new routes which are going to start in 2H. So their international operations are kind of getting significant momentum from 2H, and also they have an order of A321 Neos which will kind of give them more international range. So international mix of Indian airlines will definitely improve. So Indigo currently has around 15% of its capacity in international, whereas Spice is around 25. So you can expect some amount of closing down of that gap. Whereas Vistara, Go and AirAsia would also want to gradually come up in the international space. Vistara's strategic partner being Singapore Airlines, they have a natural advantage in international arena. So does AirAsia. So some amount of international, higher international mix will happen. This should help overall fares and also help some amount of declustering of the domestic sector.
Okay. Ansuman, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. That's ICICI Securities, selectively bullish on aviation as they would be, and I think the consensus call seems to be Interglobe Aviation. Almost everybody seems to be betting on that. Bit of a no-brainer, isn't it, Agam? I mean, look at Interglobe Aviation, avoids jet, and SpiceJet are neutral. Yeah. Almost everybody's got that call.
Yeah, I guess.
Anyways, so that's one. I'll move on to real estate then.
Yeah, all right. So one of the biggest fallouts of the NBFC crisis has been the real estate sector. If subdued demand and cash crunch weren't enough, the companies are also faced with the redemptions worth nearly $30 billion. So how are companies likely to navigate through these tough times? Let's ask Anuj Puri of ANAROCK Property Consultants, who's joining us on the show. Anuj, good afternoon, and thank you so much for joining us. Let's start off with an overview of the sector in general right now. Tell us how are you reading cues at this point in time? What's the latest?
Thank you very much, and a very good afternoon to you and your viewers. So clearly we had three tsunamis: the demonetization, GST, and RERA, and as if that wasn't enough, we've had this liquidity crisis of the NBFCs, which has had a huge amount of impact on the developer funding. So clearly we're seeing that there has been slackness in acquisition of new projects by the developers because the funding is not available from NBFCs. Secondly, some of the amounts that were committed by the NBFCs to the developers are rather coming slow, as a result of which the construction activity is starting to slacken. The third is some of the NBFCs have been hesitant in giving home loans, as a result of which there has been some impact on the demand. And the fourth is that some of the NBFCs have started to recall some of their loans. So clearly it is a widespread impact on the liquidity of the developer. Having said that, on the other side, the silver lining continues, where we have seen over the last 9 consecutive quarters, the sales have been more than the new launches. It's not necessarily that the sales have improved, it's just that the new launches have dwarfed. As a result of which 9 quarters consecutively we've seen that even over the Diwali period we saw that the sales continued to remain pretty stable and the launches were subdued. As a result of which what's happening is that the unsold inventory, which was standing at nearly 820,000 units, has started to decline, and it has come down to about 680,000 units. So as far as the sales is concerned, it does appear that this NBFC crisis has not had a huge impact on the sale. But clearly on the developer financing and the liquidity with the developer, there has been an impact.
Good afternoon, Neeraj here. Is there a possibility that if developers do not get the financing at the rates which are favorable or at the time which they want it, at some point of time in the next 3 to 6 months, at least in the mid-size and the small-size developer variety, we may see two things: either those projects getting sold off to larger developers, which might already be happening by the way, or those builders being forced to sell off the flats at a lower price than what the prevailing price around in that area could be. How strong is that possibility?
It's a very good point, Neeraj. I would say is, at this point in time, Neeraj, it's not about the rate. It's more about, can I get the liquidity? I think many of the developers are happy to pay higher rate. I think the question today is, can I get the liquidity in a short period of time? If the liquidity doesn't come into the system over, as you said, is the next 3 to 6 months, I think it'll be quite disastrous for not only the small developers, but also the mid-sized developers. Clearly, they need the funding to do the construction, and if that funding doesn't come through, I think one of the two things will happen, which is that they will consolidate these projects with stronger developers. And when I say consolidate, it's not necessarily selling the projects, Neeraj, because even the stronger developer has limited cash flow. So the stronger developer is looking more to do a joint venture, joint development, or a development management, but not necessarily use the cash that they have to buy out the smaller developers' project. Unlikely that the prices are going to dramatically come down of the apartments if the weaker developer does want liquidity within the system. Two reasons why I don't think that they will bring down the prices of the apartments so quickly. One is that they would have sold it at a higher price. And to the previous buyers, there's going to be a problem. Either the previous buyers, when they see that the price has been reduced, will stop giving installments or will ask for a corresponding refund. And the second is, which is more important, Neeraj, is that the cover that they have given to the NBFC will get blown off. Which means is that the developers will need to give more collateral to the NBFCs. And clearly at this stage, they don't have an ability to give more collateral to the NBFC. So I think unlikely that that position will come where you will see a very steep discount on the sale price of the residential units. I think what you would see, and you absolutely were bang on, that we've started to see that consolidation happening where the weaker developer is going to the stronger developer and saying, Mr. Stronger Developer, can you please inherit this project? Whether it's a DM, JV, JD, I know you're not going to buy outright. I know with your name, the project will start to sell. You have a balance sheet. You'll be able to either put in the equity through your balance sheet, or you have an ability to go to a bank. Because understand, Neeraj, that banks are still okay to fund the real estate projects. It's the issue is of the NBFC. And whilst the weaker developer may not have an ability to go to the bank because they may not have the balance sheet, a stronger developer does have an ability to take the project to the bank and get the funding from there. So I do see, as you rolled out of the two options, one more likely than the other.
So Anuj, are we saying that over the next 12 months, and whether the situation improves dramatically on the liquidity front or no, we don't know. But let's assume it improves in a very small fashion. What's the fallout? Do you reckon that the fallout is only consolidation within the industry and no big crack in real estate prices? The reason I ask this, because a common folklore is that hang on for 6 months, because of this crisis, prices have to come out dramatically. You don't reckon that will happen?
I think, Neeraj, it is unlikely that will happen. Is as I said, is, if they do bring down the price sharply, they run the risk that the inventory that they have already sold, the installments will stop coming in from the previous earlier buyers, or the earlier buyers are going to ask for a refund. At this point in time, developer has no ability to be able to refund the earlier buyers, or they may just go into a cancellation mode. So I do feel that is unlikely. One. Second is that the thought is also, Neeraj, that how much is the price that you need to drop? Is it 5%, 10%, 20%? You drop it by 20%, the buyer may want 25%. So they're more likely and moving towards consolidation story where they're saying is, let me keep this project intact, let me get into a joint venture, joint development. Equally, the weaker developer who's consolidating with the stronger developer still has skin in the game. So their belief is that because the stronger developer will be able to bring in the sales momentum, I'm still going to be in the game in there, and hence be able to put the monkey off my back, on perhaps this stronger developer's back who has an ability to manage this monkey. I may not be able to manage this monkey if I do reduce the price, and I may just open up another Pandora's box, which may then become difficult for me to handle.
Where does the government stand here, Anuj? What can they do, and what have they been doing so far?
So, clearly liquidity is a big stress point at this moment in time. I think if you were to speak with any of the NBFCs or any of the developers, invariably all of them will say is that they need more money to be pumped in at this stage within the real estate sector. And what really we feel is that the government should be focusing on, and I think they are, is to see how do they bring in more liquidity into the NBFCs and correspondingly allow those NBFCs to be able to fulfill their commitments towards the construction sanction that they have done with these developers. So I would say a one-point agenda for the government is, bring in liquidity into the real estate sector.
Okay, Anuj, I just have one final question. Do you reckon that way the scenario may improve for the larger developers, the scenario may improve for the larger financiers as well? I mean, just wondering if the smaller NBFCs who are not able to finance because of the lack of depth on the books or otherwise can't meet the demand, the larger ones, the HDFCs of the world might have a better play in the next couple of years?
I agree with you, Neeraj. I think it's a very good point. I would say is, two segments will benefit out of this. One is absolutely correct, as you rightly said, is Neeraj, as there will be consolidation in the developer segment, there will be some consolidation happening in the NBFC segment as well. There were a number of smaller NBFCs that had opened up. Those would get ultimately consolidated, and you will see perhaps a fewer, stronger NBFCs emerging. The second part is, Neeraj, is that the banks should benefit out of this because a number of developers who were finding it easier to go to the NBFC because it was quick disbursement, it was easier documentation, perhaps a little bit more money that they could secure, would now necessarily go back to the bank. And whilst the documentation may be tougher, it may take longer time, and maybe they'll be able to get a little lesser money. But I think banks will benefit because they'll start to see more construction funding files coming to them. The second is many of the NBFCs had started to do lease rental discounting, which ideally is a banking product. You will start to see is many of the NBFCs would want to get out of that product, and that will then shift into the banks. So I do feel is that over the next couple of quarters, there will be more inertia and energy coming into the banking segment, where you will see real estate construction files going to them. You will see a lot of the lease rental discounting of commercial assets, which the NBFCs had started to do, go back to the banks.
Okay. Well, Anuj, thanks for taking the time out and speaking to us on Bloomberg Quint here. Thank you so much.
Thank you.
Well, we will move on and address the small finance lenders too, because they can make the most of the liquidity crunch faced by the larger players, says UBS. Now, the global brokerage house believes that it is only going to add to the already large and untapped market for some of these companies. And we have Darshan Mehta who's joining us to give us an update with the same. Darshan?
Yeah, so UBS has come out with this note on Small Finance Bank, and you can see the move that's come in on an Equitas and an Ujjivan. AU Small Finance Bank hasn't reacted, but both of them are up almost in double digits. So Ujjivan is up 7%, Equitas is up almost 12% the last time I checked. So there is traction. More than the target price is much more important what they say. UBS says that the recent liquidity crisis for NBFC is positive for the Small Finance Bank, and the reason that he says is that this gives better access to retail and wholesale deposits, which could help them increase their market share. They're saying that the loan growth beat is high. There is high expectation of loan growth beat that will come in, and they raised the FY19 loan growth estimates by 3 to 5%. What they say is that they're seeing market share improvement and scale of new product initiatives. Even though NIMs may compress a little bit at this point of time, despite higher cost of fund, they believe that the risk reward is favorable despite concerns about the holding company. Now that the target price that they have is 700 on AU Finance Bank, Equitas they have a 160, and Ujjivan is 375. All three are higher than the Bloomberg consensus estimates, and the expected growth for FY19 in loan book is 44% for AU Bank, 42% for Equitas, and 31% for Ujjivan. So strong commentary coming in on the Small Finance Bank, and all the counters are doing well, except I am not sure why AU is not reacting. Maybe it's not in the FNO, that's why the volumes may be lower, but the other two are certainly reacting.
Also because the other two got pummeled out of shape when the promoter shareholding norms.
That was the holding discount issue that came out, and that's why they are saying that despite gathering a 40 to 50% discount holding company, still their valuations are attractive.
Yeah, so I think that correction thereof probably leading to some more upsides for these stocks today. But Darshan, thanks for putting that into perspective. That's the UBS view, and the stocks are reacting all right. Sacchitanand, Uttekar of Tradebulls with us on the show. In a bit, Amar Singh of Angel Broking also will be with us. Since we're talking about the SFBs, maybe before we talk about the markets, just a quick thought out here, Sacchitanand, on Ujjivan or Equitas. What do the charts indicate? Could there be more upsides here?
Well, I think Ujjivan has been standing out. In fact, the level that we are watching out is around 240, and in case if this particular level is breached, then it has decent amount of headroom left till 260, 265. Looking at the oscillators and looking at the some of the momentum averages, I think we may see a breakout pretty soon. So probably one should maintain a stop loss somewhere close to 228 now, and still with an anticipation of a breakout can initiate some long positions here.
Okay, Amar, good afternoon to you as well. Tell us, how are you reading cues on the indices? 2 straight days of flattish moves. Where do we go from here now?
Yeah, as I had spoken earlier, that if you look at the indices, what we are seeing here is that there is some topping out on the upside. So effectively, 10,980 and 11,000, that's a crucial level of resistance for Nifty. And if you look at the charts also, technically the weekly charts clearly show that upside is definitely going to meet with selling pressure. The monthly charts are also indicating some sideways movement. And on the daily charts, we are in overbought territory. That's the reason we are seeing this choppy trading session. But yes, on the downside, I would say 10,700 to act as an immediate level of support. So it's range bound with slightly positive bias till the time we don't see a breach below 10,700 levels. But only a decisive trade and a breach above the 11,000 mark could mean that maybe the trend has reversed. Otherwise, we would see this choppy trading sessions between this 300-point narrow range.
Okay, Sacchitanand, your index strategy for the day?
Well, Neeraj, we continue with a positive bias on the market. In fact, if you look at the entire sequence since the series started at 10,500, markets have really not breached below their previous swing low, days low. And if you look at the indicators now, this is a time wherein the ADX indicator comes really handy. We follow a ADX 9 combination, which is about to give a breakout about 25 levels, which clearly states that whatever consolidation that we have seen in last 2 trading sessions, we may see a breakout happening soon. So with that intention in our mind, we expect that the market should cruise towards say 11,100 very soon. So 10,900 call option can be bought here. 163 should be the stop loss for the trade, and we're expecting an upside right up to 285.
Sacchitanand, then talk to us about the calls that you have for today. I believe you have at least 3 picks today.
Well, yes, we stick to our positive bias, and if you look at some of the sectors where we are comfortable, IT, we have seen a double bottom formation on the weekly scale. A very similar price pattern is evident on TCS. We saw a V pattern breakout somewhere close to 1960 levels, which is indicating a target price of around 2110. So TCS can be bought for this particular target price. Stop loss can be placed at around 1975, and fresh longs could be added in TCS. ICICI Bank, we have seen a good, decent consolidation. On the daily chart, it looks like a flat getting complete, and we are expecting that the stock could again revisit its live highs near 375 levels. The stop loss can be placed around 351, and momentum trades can be initiated in ICICI Bank on the long side. ACC has been doing pretty well. It has been scaling towards its 200-day exponential moving average. Overall, we expect that this particular move could extend right up to 1585. A stop loss can be placed at around 1485, and longs could be added in ACC as well.
And Amar, you have a buy and a sell today.
Yeah, that's correct. The first one is a buy on Divi's Lab. If you look at this, I had spoken about it earlier as well. If you look at Divi's Lab, we are seeing that Divi's Lab continues to be extremely strong on the charts, be it the intermediate term and the long-term trend. However, from a short-term perspective, the stock has been consolidating. We've seen it correcting marginally, and if we look at the levels, the low that was made yesterday, so somewhere it's bounced back from there, and so there is a possibility that the stock could rally further. So any dip in Divi's Lab towards 1480, 1485 levels can be a buying opportunity with a stop loss of 1438 and a target of 1568 in the short term. And the second stock to look at is Bharti Airtel. But this is on the short side, because if you look at the charts of Bharti Airtel, in spite of being in oversold territory on the monthly as well as the weekly charts to a certain extent, we are still seeing the stock correcting, and it's not able to sustain at higher levels. So Bharti Airtel is a sell. Any pullback towards 315, 317, that can be ideally a good level to short. with a stop loss of 325.5 and a target of 297 in the short term.
Okay, stay on, German. Let's get in a fundamental voice on the show. Jigar Shah of Kimeng Securities joins us right now with his thoughts on the markets. Jigar, good having you. Thanks so much for speaking to us at Bloomberg Quint. This is Neeraj here. Good afternoon. What's the central advice, Jigar? Couple of volatile, or rather a slightly volatile period in the offing. Policy tomorrow, maybe not as much, but the state election results coming up as well. Better to sit on the sidelines at these valuations, or are you comfortable telling your clients to park in fresh money to work?
Well, hi Neeraj, thank you for having me on the show. I mean, in our view, the market could be range bound between 10,000 and 11,000 on the Nifty, with 10,500 as our target for the next 6 months or so. We think it's best time to do a bottom-up stock picking. The markets are providing you with an opportunity because of whatever is happening due to some of the NBFC related issues, oil prices going up and down, and some of the other global and local factors on politics, etc. So the best thing would be to do is to look at quality stocks and probably wait for the levels you like them to buy at. I think there are plenty of good opportunities at the moment in the market across sectors, and we would be very positive on private banks, on autos, some of the consumer stocks, and also stocks in some of the other sectors such as media and entertainment, etc.
Interesting. Okay, let's maybe try and talk about some of these. I've been looking at some, I've been wanting to hear someone who's got a negative view and a strong negative view on select auto leaders, Jigar. You have a positive view on automobiles as you just mentioned in your answer. Give us the rationale there, and in that sectorally positive view, why do you have such a negative view on the leader of the pack, which is Maruti?
Well, let me answer the first on Maruti. It's clearly a view that was determined based on the market valuation and the premium that was there for Maruti last year. So that was the reason for my sell call. And over time we have seen that the growth rate for a company like Maruti cannot be 15-20% on volume. There could be some short periods where that happens, but now growth rate is more coming down to 7-8%, and therefore I think people have to tone down their earnings expectations as well. And market share adjustments have not happened right now, but over time we will also see some market share adjustments. So the kind of premium in valuation that was being paid, which is even being paid at the moment, where you have, I think, the stock trading at about 23 times next year, and that is definitely a tall ask for a company where the earnings expansion may not be more than 12%. So that is where, you know, my sell call on Maruti. Company is a fantastic company, and at a certain price it will become attractive, but for now I would maintain my recommendation. And as far as other stocks are concerned, they are attractive on valuation and growth, and there is a sort of sync between the growth and the valuation, whether you look at Bajaj Auto with mid-teens kind of earning growth. Similarly on Mahindra, the expected earning growth is mid-teens, and the valuation is also on similar lines, which makes it quite attractive to own.
You know, Ultratech Cement hasn't really done too much over the last 1 year or so. However, it has seen a sharp recovery in the last 1 month from levels of around 3,300 to it's around 4,000 now. What stands out for you? What is the story here, and how do you rate this one against some of its other peers of the same size?
So first of all, clearly the industry growth rate, I mean, if you see, it's at a mid-teen growth rate, which has not happened in last 1 decade. So industry growth is doing extremely well, surprising everyone. Secondly, when we look at the decline in the energy prices of late, that would rub off on Ultratech as well as the other players in the sector positively in the third quarter earnings. So that's a near-term positive. And if we go more specific on Ultratech, I think the consolidation or integration of JP is over, and that should now start reflecting in the company's earnings going forward. The correct EBITDA per ton is more like 1,000 rupees a ton, whereas company is currently undershooting that. So they should get to that with the fourth quarter results and also in the next year. So that will be a major increase. And also the integration of Century and Binani should be relatively smooth. The company has plenty of operating leverage, and going forward the capex could come down and result in free cash flows as well. So all of this augurs well for Ultratech. There has been a period of very high capex and negative free cash flows, rising debt, etc. In the next 2-3 years, the situation can be completely reverse of that.
Interesting. Okay. The next, of course, pocket to talk about, aside of course, what's happening to autos, is also media. And Jigar, you have a fairly wide coverage, I presume, on that space, and some thoughts on a clutch of those names. Let me try and break that up into two. First, talk about the exhibition counters. PVR was very active in trade yesterday. Somebody was pointing about how the next 4 or 5 months have a slew of releases which might just increase the footfalls in these companies or in these boxes. What's happening here? This duopoly of PVR and Inox, you reckon it is set to make some big earnings growth, and would that be a principal reason for stock market performance as well, or stock performance as well?
So first of all, if you see the media sector, particularly TV and OTT is going through a shakeout. Also, what we have seen with Reliance, Amazon, Netflix, and Disney, Hotstar, whatever they are doing to the space, I think there is a shakeout everywhere. And exhibition companies have historically grown through M&A. I believe more M&A will take place, and that would further improve their valuation, because currently the valuations have been down following the GST and demonetization period where the industry was not doing too well. I think we are still some time away when the OTT really starts affecting the theatrical footfalls. So far it is all right, and if the content quality is good, then I think theaters would do well, and they are having those levers of F&B and advertising going very well for them. So the top 2-3 companies in the sector would do very well, and we continue to have buy on both PVR and Inox based on the next couple of years of story, the way it is panning out, and valuations are reasonable. I mean, I would say that the companies like Z and Sun are more affected by what is happening in the OTT space, and obviously we have seen announcements also on this regard, particularly from Z in terms of having collaboration and more technology oriented global partner. So that's that in the television side. And then the print media is sold off completely because of the newsprint prices killing their profitability this year. Hopefully the next year will be better. Their newsprint costs should rationalize by the end of this year, as the energy costs have come down, and overall their inventories at high cost would also be used up by then. So those are cheap, but then there are right reasons. They have growth issues, and they are also hurt by the short-term problem with their profitability. But we think that print companies including DB Corp, Jagran and Hindustan Media Ventures are cheap. They are really very cheap if somebody wants to look at it a slightly longer term and as a bit of contrarian.
Just a follow-up question there. Is there any evidence to suggest that broadcasters and print media companies do better in an election year?
Well, I think it has been that way. Generally the government ads go up substantially during that period, both the state and central governments, and also I think other parties who are in the fray, they do that. But it seems that this year we are seeing a change, and people are also spending a lot on the digital, which was not probably such a big draw in 2013-14. So I think now there would be some shift in the business from print to digital is how I reckon it.
Okay. By the way, just bring up a couple of stocks which are moving around in the last couple of hours. So Strides, Sachin, or Strides should come up on your screen. That stock at 462 has gone off from the highs of the day in a meaningful way. I think the volumes too have come off quite a bit. Strides Pharma Science essentially, name currently 462 and counting out here. We'll just talk about this fundamentally too, but just technically because it's fallen so much. Amar Singh, for somebody who is holding on to long position in a Strides, this fall in the last couple of hours, what should he or she do?
I would say that looking at Strides from a technical perspective, the trend continues to remain down, and it's witnessing some pullback. So there is very likelihood that if the stock is not able to trade above the 480, 485 mark, then the stock could correct slightly towards 440 level. So it's a range of 440 and 480 in the short term.
And get out of a long position if you had one.
Yes.
Okay. Stocks that have done well in the last 45 minutes of trade, I just want to pull those one up for you as well. I think the metal names have come back. Vedanta, for example, is up about a couple of percentage points and a large portion of the move in the last 5 minutes of trade. Sacchitanand, a quick thought here, Vedanta.
I think the recovery has been commendable. In fact, the immediate hurdle for the stock is resting somewhere close to 209, and in case if that particular level is breached, then probably we may see a falling wedge pattern getting activated, which may push the stock towards say 222, 223 zone. So I think overall the entire the rally has been really good. I think it is good time wherein a stop loss can be placed somewhere close to 202 and fresh longs can be considered.
I want to pull up some of these mid-cap IT names, NIT Technologies specifically, and perhaps KPIT Technologies as well, because they have been trending higher. We've seen strength come through, and there's certainly been accumulation in open interest. KPIT Technologies, of course, has given up its gains on an intraday basis, but NIT Technologies still stands out. Amar, can you quickly give us your view on NIT Tech? How are you viewing trade on this one? How would you approach this one?
I would say that NIT Tech, if you look at it, it has taken support and it's bounced back. And on the daily charts, we are seeing positive and bullish divergence. So that's the reason the reason stock is bouncing back. But on the upside, the stock has got extremely crucial resistance around 1140, 1150. So those who are on the long side, ideally they should look at booking profits around those levels. Because technically on the weekly charts also, the stock is in oversold territory, but it will continue to meet with extremely strong pressure around 1140, 1160 zone. So I would say that it's not a good idea to buy at current levels, because slightly higher levels would meet with profit booking in the stock.
Okay. Jigar, before we let you go, I know you guys may not be tracking the small finance banks that closely. You started off the answer saying that you have a positive view on the banking space by and large. Between the HDFC Kotak IndusInd variety versus the ICICI Axis variety, I'm leaving out yes currently because it's in a flux of its own. But between these two camps, if I can use that term, where would you be more comfortable putting money in? Where do you think people will get a bigger bang for the buck?
Well, just to clarify, we like the private bank space and also some of the NBFCs for that matter. But to answer your question, clearly it appears that we are at the tail of the asset quality issues now. And if that is true, then I think both ICICI and Axis can get re-rated once they start showing a strong performance, which is expected in the next year. So if their provisioning is done and they start getting the recoveries from the IBC process, which is also appearing very likely, then I think these companies are trading at a relatively more attractive valuation than HDFC, IndusInd and Kotak, and there should be a very strong upside for them. The liability franchise is very good, and on the whole, incrementally we should look at much lesser slippages. So clearly the bang for the buck in case of those banks would be slightly better than the other names, which are definitely more qualitative even today.
Okay, Jigar, we leave it at that. Thank you so much for taking the time out and speaking to us on Bloomberg Quint. Thank you.
Thank you.
We'll move on and take some questions with the management. Uflex has gained the most in over a month in today's trading session after the company's global film manufacturing arm that is won a US patent that covers all categories of polyester films, and the company has won exclusive rights to supply the film in US, Europe and in India. To discuss the same in detail, joining us on the phone line right now is Rajesh Bhatia of Uflex. Mr. Bhatia, good afternoon and thank you for joining us. If you could actually take us through the significance of the updates here and what it means for the financials of the company going forward.
Okay. So I think Uflex, as we've been saying all throughout, is a highly R&D focused company and, believes in, new product solutions for our customers. And, the same situation we had in the pharma packaging, where currently what is being used is a combination of PVC, nylon, and aluminum foil. So a layer of these three with aluminum sandwich between PVC and nylon is currently being used, which is, environment unfriendly. And PVC, in fact, has been banned by the NGT, but somehow, in the absence of any new solution, that's what currently is going on. Even worldwide also, there is a lot of pressure on, PVC and nylon combination being done away with because it's simply environmentally unfriendly. And that's where we were looking at developing a solution which actually replaces, these environment unfriendly products. And we've come out with a solution where, you use the BOPET film as a top layer, the aluminum as a middle layer, and the BOPET film as the as a third layer, which can have the same better set of barrier properties what are currently being available in the pharma packaging. And that's what the solution we've tested at our end. So now, obviously, with the patent coming our way, we'll also go to large pharma manufacturing companies to give them an alternate product. And obviously, they'll test also, the barrier properties and other characteristics at their end. But, that's what our endeavor is going forward. It takes some time, between 6 months to a year, for these companies to go through various testing processes and all that. But we're seeing a big opportunity here because currently India market is about is close to about 18,000 tons per annum in the pharma blister packaging, and globally it's about $20 billion. So clearly, with the patent being available for us in US, India, Europe, I think we looking to grow this business exponentially. We're currently doing some business in this pharma space from our existing locations in India, which is about 15% of the market share. I think we need to grow this to take it well past more than 50% market share. And obviously, we'll have to, beyond that, and expanding globally, we'll have to look at new investments to support, and all will depend on as to how this we take it forward, how's the client acceptance to this, and they're ready to make a change. One thing which I can say is that the client end, there's no need to change the existing packaging machines which are there, and the existing machines can take care of this new combination of the strip packaging. Sure. So clearly, a very well position. The market is there to, already there and under a lot of pressure for doing away with PVC. So clearly, we see a huge advantage and opportunity in this business.
Sure. So, Mr. Bhatia, I'm sure you must be having some projections in mind when it comes to this specific patent, what the monetization of this patent could mean in the long run for your income. Any ideas that you could offer us?
I think we should look at something between 3 to 4 years' time. India and overseas put together, given that the potential is huge, overseas global market by that time would be about 30 billion. I think even if we look at, a sort of 4 to 4% market share in this segment, I think we'll still be doing wonderfully well, as that means that, you are actually looking at in excess over $1 billion kind of a revenue from this product, which we sure of quite confident of, sort of achieving this as we go down the years.
Bhatia, just one question. So while this may be a long-term benefit for you, what about the short term? How do you expect FY19 to be like?
So FY19, I don't think so we'll have any impact of this product coming our way because,
No, Mr. Bhatia, that I understand. So, and which is why my question, because this is a long-term benefit, and while that is very welcome, what about the short term? How do you expect FY19 to be?
So FY19, I think we'll be looking at a top line of about 7,000 crores. We've seen a 10-12% volume growth, which is happening on a quarter-to-quarter basis. So I think we will look at about 7,000 crores as a top line in the FY19.
Wish you all the best for that, and congratulations on this patent as well, Mr. Bhatia. Thanks so much for joining in.
Thank you, sir.
That's Rajesh Bhatia of Uflex. Optimistic over the long term because of the patents that they have gotten. The stock too up about 5% in trade. Okay, before we take that break, let's talk about the chart of the day segment. Sun Pharma been going through a rough patch with questions raised on corporate governance standards and charges of insider trading resurfacing. While the promoter Dilip Sanghvi tried hard to allay these concerns, the shareholders have had to take quite a knock of their portfolios. Yash Upadhyay is here to tell us and quantify the hit to those portfolios. Yash.
Afternoon, Neeraj. So it is clearly tough times as far as investors of Sun Pharma are concerned. Today, as the stock extends its run of declines to a second straight day, today alone, it is down nearly 5% from the high point of the day, coupled with the massive 7.5% drawdown that we saw yesterday. Now, with this, the difference in percentage terms of the share price with respect to its 12-month consensus Bloomberg target price is the highest since August 2017, which stands at about 29.5%, which you can see over here was the highest since August 2017. Now, with this, additionally, the stock it has been on course for its biggest losing streak, down nearly 22.5% on a year-to-date basis, just slightly behind Piramal Enterprises and on course to overtake it, becoming the worst performing Nifty pharma stock on the Nifty Pharma Index. However, there could be more pain in store as brokerage firm Edelweiss in its recent report has cut the target price from 500 to 430 on the counter as they seek further clarity with respect to their queries regarding Aditya Medi sales and the $350 million in unsecured loans that the company has extended as they expect these issues to overshadow the overall performance of the company going forward, at least in the near term. Back to you.
Well, Sun Pharma did begin the day of trade in the green, but it has come off. Yash, thank you for joining us and getting us that chart of the day on Sun Pharma. We continue to track developments there, which is trending in the red right now. But we slip into a short break, but do come back. We will have the Fab 4 stocks of the day as well as the dealing room check at 3:15. Stay tuned in.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Countdown right here on Bloomberg Quint. 28.5 minutes left for the markets to shut shop. Quickly bring up what the European indices are doing at this point. Remember, yesterday there was a big tick of green for the European indices. In today's session, not quite living up there. The US markets too should come up on your screen after that 2% odd uptick at around this time, and then eventually ending 1% higher. Today the US markets too are showing some signs of a pullback, so we may not have the best of cues coming into tomorrow's trade, but hey, today's session has shown that the best of cues may not necessarily mean that we'll start off well. We've had a lackluster day in trade. Let's see if this lasts. Just the volume should come up on your screen for a minute, and let's just see what's the volume picture looking like in trade today before we get the Fab4 stocks. Yes, let's get the volumes up. 24,000, so the cash market volumes way lower than what was the case yesterday. The F&O volumes too, 417, I would reckon will be at 450 or thereabouts at close, which is slightly subpar, but hey, we're at the start of the series and ahead of a very volatile period of a lot of events, so maybe to be anticipated. As we speak, we're still trading about 0.5% lower for the Sensex. Okay, let's try and spell some good news. We've spoken about some gloom, but maybe Yash can come in and talk about the Fab4 list stocks of the day, and let's try and find out what's made it to his list for the day today. Yash, good afternoon.
Good afternoon, Neeraj. I'll start with the top gainer on my list actually, and that is, Edelweiss, which is locked in an upper circuit of 5% on the back of an ET report suggesting that PE firms like TPG, KKR and Blackstone, among others, are in talks to acquire close to 20 to 25% stake in its global wealth and asset management business. ACL Tech is up about 2% after the company informed about expanding its strategic partnership with Barclays into digital workplace services. Shriram EPC had rallied close to 15% today on the back of two big order wins amounting to some 225 crore rupees from the Jharkhand government. And the last stock I want to highlight is Dr. Lal Path Labs. Now this one has been gaining on the back of heavy volumes for a second consecutive day, up more than 9% in that period. Volumes are nearly 11 times the 20-day average, so watch out for something like a Dr. Lal Path.
Yes, thank you for joining us and getting us those Fab4 stocks of the day. With that, we get in another fundamental voice here. Mr. G. Chokkalingam of Equinomics Research joins us. Mr. Chokkalingam, good afternoon, and thanking you for taking the time out. Let me ask you by taking your view on the markets in general. Let's talk about the benchmark indices, the Nifty specifically. How are you reading cues when it comes to some of its constituents, and what do you foresee could happen? Because we do have the RBI policy tomorrow, and next week we will also have the results of the state elections.
Yeah, good afternoon. I don't think RBI would raise the interest rate because the global growth started correcting. We have seen it in Eurozone, Japan. Even yesterday, South Korea had seen just 0.6% third quarter growth over Q2. And therefore, I firmly believe that there is lesser chances of hiking the interest rate. That would be positive. Of course, election results nobody can predict. There could be a possibly knee-jerk reaction on the eve of results, but I would say that one should utilize that opportunity to buy the stock. So therefore, market might be on side wave till the election results are out. After that, it would take some, some direction. And post-election, I believe there is a possibility of some recovery because, in my firm view, the objectives of state elections are different from general election. So whatever is the outcome, it will not have much impact on the market after the knee-jerk reaction because in the general election, the mandate would be completely different. It would shift away from the local issues. So I believe, till another month's time, the market would be on sideways. But it's a good opportunity for small cap and mid cap. We just estimated that 21 lakh crore of market cap got wiped out if you exclude top 10 large cap index stocks. And this is primarily from small and mid cap stocks. So I am quite bullish on this particular segment for 2019.
Okay, I want to pull up Apollo Hospitals because it is one of the biggest losers on the NSE 500 today. And I also want to take a technical check. The sharp drop in this particular stock has come in the last 15 odd minutes, and it is continuing to decline. It's down around 3.5% right now. Sacchitanand, can you come in on Apollo Hospitals now? What are you witnessing in this stock? It is looking weak, at least as far as the intraday charts go. How would you approach this?
Well, nothing wrong in the trend. In fact, if you look at the broader picture, we saw a breakout from a declining channel, which was ongoing for almost 2.5 years, somewhere close to 1200, and from there we have seen a spurt of momentum. Right now, what we have seen or what we are observing is just a correction within the ongoing trend. So probably we may see it, slipping towards say 1210, 1200 levels again. But I think that should be an opportunity again to get into the counter. The broader structure for Apollo Hospital remains very strong. We are of the opinion that the stock could see 1440, 1460 levels very soon. So probably this particular decline towards 1200 should be a good opportunity to add longs. Stop loss on the lower side should be placed at around 1165 on a closing basis.
Amar, somebody was talking about Kesoram yesterday. Spoke about it nearing some resistance levels at 96, 97 odd. Do you see that too?
Yeah, looking at Kesoram, what we are seeing here is that the stock has bounced back significantly, and it is trading. So it is trading firm on the daily charts as well as the short-term charts as well. But on the technically, I would say 99 and 100. That's a key level of resistance, but if that is breached, then the stock is headed higher towards 110 because the stock has a few things going in its favor on the short term as well as the intermediate term. The trend remains extremely positive for the stock, and even on the long term charts, it's in oversold territory. So there is a possibility that this bounce back this rally could further continue, and once it decisively trades above the 100, 101 mark, then prices could rally towards 110 levels.
That's the 4th straight day of gains for Kesoram Industries, but what is declining for the 11th straight day today is Quess Corp. And in Quess Corp, the selling has only intensified considering a decline of around 3% at this point in time. It's another one of those counters which is in the cash market right now. But Sacchitanand, how are you looking at trade right now? What's going on and what levels would you be watching out for? Now, I know you can't really short the stock, but if someone were to go long, do you think the risk reward would be favorable?
Well, when we look at risk reward, there are specific patterns wherein probable targets are derived. But in this particular case, the trend has been clearly weak, and if you look at a support perspective, the support is somewhere close to around 670, which is very close by. But there is no evidence that that suggests that this particular support could hold. So probably one should avoid, trading any long positions in this particular counter. Neither on a desirable basis, even if the stock declines further, it should not be a case wherein we are getting the stock lower. That's why we are buying. I think there are no signs of any reversals yet, so I think it should be avoided.
Okay. Well, that's the view on Quess Corp going in. But moving on to the news which has been in focus, the Unilever expects GSK consumer products to add as much as 10% to revenues. And Unilever's global head for foods and refreshment business, Nitin Paranjpe, spoke about the merger at the investment con call today. Listen in.
Few reasons why it is exciting because it's in India. Because the Indian business will be in a position to unlock tremendous synergies from this. Synergies not just in terms of growth, but also in terms of cost. Massive opportunities. It is our belief that this business could grow at over 10% per annum and have a 10 percentage point improvement through the synergies that we've got. And that creates enormous value for us.
Okay, so that's well, the management of Unilever. Speaking about Unilever's point of view here in the merger, but Mr. Chokkalingam, can you come in on this one? Now, I know that Unilever has been trading at well, historically high valuations. Even at this point in time, it is one of the most expensive stocks in the FMCG space. What do you make of this merger, and what do you make of buying into Unilever at these prices?
Certainly, I mean, it is positive because, all of us know that the kind of network decades back Group 1 T setup now, which is part of HUL, and its distribution network is far superior to, GSK. So therefore, I am pretty confident that HUL would be able to exploit more opportunities out of this brand. But as you said, the valuations are very rich. And it is also true that value investors like us are going wrong in not buying HUL at such exorbitant valuation. But still, I would advise caution in the short term. Only those who can wait for 2-3 years can consider buying, or those who are already holding, they can definitely hold on to the stock.
Okay, since you're talking about FMCG, Dabur spoke to us earlier. Here are a small slice of the conversation and about what Lalit Malik had to say about volumes as well as margins.
Annualized basis, we will continue to have lower double-digit volume growth. There has been some seasonality which we have seen. There was a high growth in Q1 and Q2 was a little muted. But considering the overall scenario for the annualized basis, we do expect that our growth in India FMCG is likely to be in the lower double-digit on an annualized basis.
Considering now that, the economic data also that's coming out, and particularly the GDP number that came out at 7.1% below expectations, suggests that there's some a bit of a slack in consumption. Is that a big worry for you?
Well, I think if we were to look at in terms of the growth scenarios, what we do expect is that the sentiments have been to some extent muted. At the same time, what we do expect is the winter is going to be a little mild this year. So there will be some impact. But if we were to look at on an annualized basis, I think things will even out. So we do expect to be steady growth going forward as far as the top line is concerned. On the margin, there would certainly be some pressure at the back of inflation, which will have some impact on the margins. But considering the fact that we are working towards our synergies and cost reduction initiatives and select price increases, our efforts will be to maintain the margin as we go forward.
So can you quantify that for us, sir, in terms of what kind of, how much of a margin impact will you see, and what is the quantum of, cost measures control that you're going to be taking?
Well, I think it's very difficult to quantify the exact amount, but what we certainly can see is that there has been an inflationary impact of around 3.5 to 4% that we have seen on the input cost of our category of products. However, our price increase has been within the range of 1.5 to 2%. So therefore, the differential is something that our efforts have been to absorb through our synergies and cost initiatives.
All right, so closer to about 1.6%. So let's talk about, the split between the rural as well as the urban footprint for you. So while your footprint and reach in the rural segment is stronger, the business contribution still comes in majorly from the urban segment. Is there a plan to make sure that the contribution is you up the ante on the business contribution from the rural segment as well to match the urban segment?
Well, I think if we were to look at the split between rural and urban, it's around 47% of our revenue comes from rural and the balance is from the urban. And what we have seen is that the rural growth has been comparatively faster as compared to the urban growth, primarily on account of our expansion of the distribution network and having the regional focus and improving the portfolio through direct distribution. So therefore we have seen rural growth to be at a better pace as compared to urban, but at the same time the urban growth is happening at the back of very strong modern trade growth and cash and carry growth. At the same time, the e-commerce business is also showing a very healthy growth for us, though the base is small. So in a nutshell, there has been growth both on the urban as well as rural, but rural has been comparatively higher as compared to the urban.
What would the growth trajectory be for the rural segment and the urban segment?
Well, as far as the growth is concerned, as I said, that overall we do expect to be on an annualized basis at low double digit at volume on India FMCG side.
Well, that's of course Dabur and talking about how there might be margin pressure, but they look to garner volumes in the quarters to come. Okay. 3:15, that time of the show, when we get you what dealing rooms are recommending in the session today. Darshan and Yatin are here with their channel checks. Good afternoon, both of you. Darshan, let's start off with you first.
Yeah, so Pharma as a pack, in which, among the large caps, there are two stocks in which money seems to be flowing in from the other counter. One of them is Aurobindo Pharma. Recently, you saw Dr. Reddy's hit a 52-week high. Aurobindo has hit its fresh 52-week high in trade today. So there is enough traction that's happening. A couple of dealing rooms that I spoke to do indicate that there are flows that are happening at Aurobindo Pharma. The other one is, of late you've seen that metals have rallied, at least in the last half an hour. There is flows that are happening. A large domestic fund is accumulating a lot of metal stocks, especially Vedanta. So watch out for Vedanta. And the final stock that dealers are talking about is Indian Oil. Over the past few days, you are seeing traction that's happening in some of the PSU stocks, at least in the oil and gas space. Some of the HNIs are very active in Indian Oil and they are accumulating. So that's something that's been watched out. But Yatin, what are you having?
Well, a couple of stocks, and we have the entire, FMCG FAC, which moved up yesterday, and today we are looking at some bit of, cooling off in share prices, including that of HUL. And dealers do indicate that at higher levels, a lot of these domestic institutional funds are sellers. So, HUL since the morning has been under pressure, and, a lot of fund selling is there at higher levels, according to the dealers. We also had a couple of brokerages talk about the deal, wherein, we have HUL, which has, bought a piece of Glaxo's business in India. Apart from, HUL, we have DLF, and surprisingly, this stock is down nearly 4%. Last time I checked on huge volumes. Dealers do indicate that in the future and option segment, there are, short sellers, and probably the selling would continue. So watch out for this one, has been under selling pressure. And sugar as a pack, again, is active today. And dealers do indicate that HNIs have been, aggressive buyers in some sugar stocks from the trading side. And on the basis of F&O trends, they do recommend a buy today, sell tomorrow kind of strategy.
Okay, well, Yatin, thank you for bringing us some of those dealing room names that are a buzz in the dealing rooms, but I want to bring up something like a Page Industries as well. I know we talk about this from time to time, and again, it's trending lower today. Moves are usually sharp because you usually have your HNIs and your institutions, dealing in something like a Page Industries. At this point in time, it's trending lower. Amar, can you come in on Page Industries? How are you reading cues on this one, and what are the technicals telling you?
Yeah, Page Industries continues to be positive on the long term, but on the intermediate term trend, we are seeing the stock witnessing selling pressure. And if we look at the daily charts, there is bullish divergence. So I would suggest that on the downside, the stock has got extremely strong support around 24,800 and 25,000 levels. So that's a crucial level to watch out for, because that was a recent bottom from where the stock has bounced back. But sustaining at higher levels is not going to be easy for the stock. So on the upside, again, 27,500, 28,000, that could be a level. So the stock is definitely going into some consolidation, and ideally should not breach the 24,800 levels. If that is breached, then we could see further sell-off in the stock.
Okay. Interesting. Watch out for Page as well. At 3-month returns, not well, down about 22%, and stock's been Well, maybe facing some bit of valuation conundrums because of the quantum of growth that could happen in Page Industries. So, interesting times up ahead. Mr. Chokkalingam, any thoughts here? Page Industries or that entire pocket of stocks?
I agree with you that the growth is an issue now. The company which has done phenomenally well failed to deliver on growth front in September quarter. Another thing which I observed by closely interacting with the industry is that after seeing the phenomenal success of Page Industry in the business as well as in the stock market, there are many mid-sized textile companies have moved to this particular segment to add value to the company as well as for the shareholders. So probably there is aggressive competition slowly coming to Page Industry. That is why the September quarter the growth was not there. And at current price it is trading at about 65 PE on current year earning. So I would be very comfortable in case stock falls close to 20,000. At current price, I would continue to maintain a sell on it.
Well, it is about 30% down from its record highs in August, but we have less than 9 minutes left for market close. So I'm going to take the closing strategies from our experts. Sacchitanand, I'm going to come to you. Your views now with respect to the closing.
Well, Bharat Forge is one particular stock which we have recommended. The stock is holding around 583 now. We expect this move to extend towards 600. Stop loss can be placed at around 576 now, and longs can be added in Bharat Forge.
Okay, and Amar, you for closing strategies now?
I would say one can look at Group Finance because this is one stock. If you look at the stock has rallied from the recent lows, and it is trading firm around 298 levels or so, and technically also it is I would say it's in oversold territory, and there is a bullish divergence, as I said. So this one can look at this. So Group Finance can be a buy around current levels with a stop loss of 293 and a target of 318 in the short term.
Well, so a couple of trading strategies and BTST calls. Let's look at stocks which are moving up and down in the session. The OMCs, for example, are actually on a bit of a tear. Can we pull up on the terminal? Can we pull up the crude prices and see what's happening to crude currently? Just wondering if there is some movement there. Yesterday was a big day on the upside for crude. I wonder what's the case right now. Should come up on your screen. Also get the currency up on the screen in just moments from now. Just a couple of macro indicators before we start wrapping up the show. So this is what's happening to crude. Well, steady 62.8 and 53.94. So some bit of further hardening that's happening in both NYMEX as well as Brent crude. But OMCs are actually doing rather well for themselves. No problems there whatsoever. The currency is the other aspect that we just quickly highlight. Yesterday was a big day of depreciation for the rupee. Lost almost 1%. In today's session, well, after starting off well, some bit of weakening for the rupee at 70.56. But OMC is doing rather well for themselves. Any thoughts on the charts here, Amar? BP, HP, IOC?
Yeah, looking at BPCL, what we are seeing here is that the stock has bounced back. And if we look at the current levels, it's trading around 333. So this is one stock one can look at accumulating because it has a potential to rally towards 355, 360 levels. And technically also it's strong on the short term as well as the intermediate term trend, and the long term trend it's in oversold territory. So there is a possibility that the stock could rally higher. And on the downside, 320 is an immediate level of good support for this particular stock.
All right. Well, Mr. Chokkalingam, can you come in on some of these microfinance companies now, because they have been trending higher? How are you reading cues here, and if there is any preference at this point in time for you?
Instead of buying microfinance, I prefer small regional banks like South Indian Bank, ANAROCK Bank, which are still trading at a discount to adjusted book value, whereas microfinance companies, even after the fall, they are at a substantial premium to adjusted book value. And also, there has been a lot of competition within the listed space, even outside listed space. After seeing the phenomenal success of microfinance companies like Bharat Finance, the competition is emerging and evolving. So I would stick to old regional banks, private banks, rather than buying microfinance companies.
Okay. Mr. Chokkalingam, we will leave it at that. Thanks so much for taking time out and being us. Actually, I would have asked you which is the private bank or the old finance bank that is your favorite, because there are 3 or 4 out there. If you can quickly enumerate in a minute, Mr. Chokkalingam, which is the one that you would look to buy the most?
Yeah, my best to bet is Karnataka Bank because it is business is more than 1 lakh crore and it is growing in the double digit, the credit. And second is South Indian Bank. That is also a discount to book value and the business is more than 1 lakh crore. Both banks have managed to reduce the net NPA in the recent times. And as a disclosure, personally also I have invested apart from buying for my clients.
Chokkalingam, we'll leave it at that. Thanks so much for taking the time out. You mentioned South Indian Bank. I just thought I'll get the pecking order from you. So Karnataka Bank is the top stock in that small private banks that Mr. Chokkalingam believes one can buy. As we start wrapping up, Amar, just one word on the charts of the IT names. Nifty IT or the large cap IT names, all of them have done really well today. If you had an existing long position, would you carry home the longs?
Yeah, looking at the large IT names, I would say TCS. If you talk about TCS, what we're seeing in TCS is that the short-term trend definitely remains positive. Long-term is also positive, and it's been moving from oversold territory. So there is a possibility of further rally in TCS towards 2100 levels, and currently it's around 2012. For the last 3-4 days, it did consolidate. So it has got extremely strong support around 1950. So one can have any pullback can be used as a buying opportunity. The stop loss needs to be below 1950 and a target of 2120 can be on the upside.
We've seen surprising strength in something like an SRF because that's been trending higher today. It's been on an up move from the mark of around 1700 if I'm not mistaken. It's right now at 2100 and 1700 was about in the month of October. So there's been a clear outperformance in the last few weeks for SRF. It's seen an accumulation in open interest today as well. It's trending higher at around 2167. Amar, more legs to grow for this particular stock to rally?
No, I would say that you're right that the stock has rallied significantly from almost 1700 levels to 2166 currently. But what we are seeing on the daily charts is that there is bearish divergence on the daily charts. So that clearly reflects that the bullish momentum for this stock seems to be waning off. And even if you look at the monthly charts, so it is approaching extremely strong resistance zone around 2175, 2180 levels. So I would suggest that this is definitely not a good time to buy. Rather, one should look at booking profits in this particular stock. Only on some decent correction in the stock because the stock has now got extremely strong support coming around 2050, 2060 zone. So any pullback then.
Oops, I think we just lost that line, but nevertheless, it's time to start wrapping up the market, so let's do that. It's been, frankly, a very flat kind of a line for our markets because the Nifty Bank has stayed at this 0.5% lower level and the Nifty and the Sensex have stayed at these levels for better part of the trading day today. So no big gyrations. Mid caps and the small caps marginally in the green. If at all, the mid caps marginally in the red, and those indices will also come up on your screen. And that's pretty much about the kind of movement that we've had. In fact, the small caps have moved into the red, so that's probably the only deviation. 0.5% in the green at 1 o'clock, currently very, very flat. But Agam will speak more about these. Let me just try and speak about the large caps and quickly tell you what's moved and what's not. So BP, HP, RSC and the OMCs have had a fabulous outing today. BPCL in particular up 3%, ONGC about 2.5%. Wipro, Infosys, HCL Tech from the IT pack have done rather well for themselves as well. So it's a good show by what's in the IT space, to be honest. What's not done well, Sun Pharma down about 3%. There's weakness in Mahindra & Mahindra at 2.5%, HDFC about a couple of percentage points, SBI 1.5%, HDFC Bank about 1.2%. A set of names which haven't quite done well in trade today. But Agam, what about the broader end of the spectrum?
Well, another mixed day of trade. We haven't seen too much of a swing in the advance decline ratio, but I'm going to start with some of the gainers in today's day of trade. And well, quite naturally, I'm going to have a microcap cap name in my list. So let me start out with Equitas Holding, and that should come come up on your screen. There you have it. It's been trading higher by as much as 9%, and a lot of strength along with Equitas, several other microcap names, something like Ujjivan Financial also advancing. But let's bring up Thermax then. And of course, there you have it. That's Ujjivan Financial. But Thermax is the one which is also advanced. It picked up in the last couple of hours of trade, and it's trending higher at around 7%. Dishman Carbogen is the other interesting one. It doesn't always show up in your gainers list, but today it's higher by nearly 8%. It's been strong throughout the day, as you can see on the graph and the intraday graph there. Trident is the other one which is also in focus. We've seen a lot of strength there as well, up 6% at this point in time. We're likely to close at these highs. But on the losing end, we have Shankara Building Products. Hit a lower circuit in the middle of the session, and it is down 10% locked in a lower circuit currently, so more weakness there. We also have some weakness in Eros International, because that's down around 4.5% at this point in time too. And Apollo Hospitals, we've seen a lot of build up towards the short side in its futures, and it's also trending lower by around 3.9% at this point in time, so weakness there as well. So as I was suggesting, mixed cues coming in from the broader markets, and well, we're going to have to take stock of what's really going to go on for the broader markets too. But I reckon tomorrow, Neeraj, all eyes will be on the RBI monetary policy and what it can do for interest rate sensitives, even though we're not really expecting a change in rates.
Or stance, Agam. I would reckon that it will be, in that sense, a policy devoid of excitement, but you never know. We could conjure up something. So yeah, you're right. This time around, tomorrow we'll be talking about the policy for sure. But yeah, the day today, steady as she goes, no big gyrations. I guess the market breadth will show, though, that some bit of movement towards the declines as the day progressed, and we ended at the worst part of the day, even though it's not an alarm bell.
Yeah, and then turnovers, I'm sure we don't have too much to speak about there either, because we've clearly seen consolidation, and you know, Neeraj guessed around 460, 450, 416. That's exactly where we closed when the NSE F&O turnover was concerned. NSE cash also were largely at average levels of around 29,000 crores. On the whole, not too much to speak about. Let's take a look at the contributors though, and see whether there have been big moves there. So we have seen strength in some of the IT names. Of course, as we were suggesting, HDFC Twins are bearing down on the indices right now, and some weakness in M&M and SBI as well. But other than that, well, it's fairly evenly poised between gainers and losers today.
Yeah, not much to take home from. But the Nifty Bank has looked wobbly. You know, this morning, Hedrin Mendonca mentioned that it might be a risky move, but he was tempted to go and short the Nifty Bank.
Right.
So if you did that in the morning, you're marginally in the money. The question mark only is ahead of the policy tomorrow. Can the Nifty Bank give returns? Actually, final thoughts from our experts, and that would be my question to you, Sacchitanand. The Nifty Bank, which has looked slightly wobbly today compared to the index, what could happen here? What's the near-term chart showing like?
Well, when it comes to the trend, I think the trend is still very much intact on the positive side. But when it comes to momentum, yes, you know, the indices did witness an overbought zone, and this is where we are seeing some bouts of consolidation. The concern will only trigger in case if the Bank Nifty closes below 26,550 from here on, and you know, that will be a level wherein we may see a trend line getting breached, which has been holding on since the beginning of since the journey began from sub 25,000 levels. So I think the state of the trend is healthy so far as 26,550 is held on, and on the higher side we are expecting that you know, gradually you know, we may see this indices, you know, clearing towards 27,500. So I think the overall stance on the indices right now is more on a consolidative basis. From a momentum perspective, 26,890 is the level that we would be watching in tomorrow's session. So in case if that level is breached, we may see again momentum coming back into play.
Okay, Amar, your closing thoughts? We closed just shy of 10,900.
I would say that if you look at the indices, basically they are in overbought territory, and weekly charts really are not clearly displaying extreme strength. So I would say that higher levels would meet with a selling pressure for Bank Nifty around 27,000 levels, crucial support coming around 26,300, 400 zone, and tomorrow being the policy day, so we could see some increased volatility. As far as Nifty is concerned, again, Nifty seems to be capped on the upside. 10,940, 950 immediate short-term top for Bank Nifty. If that is taken out, sustained decisively, then only we could see a rally upside, and the downside 10,750. That's a crucial zone of support. So it's a range-bound market which appears technically also, and I would say that that's the way it is going to be till we see a breach above these levels.
Leave it at that, gentlemen. Thank you so much for joining in today and giving us that perspective. Really appreciate your time. With that, it's a wrap on this edition of Countdown from Agam and me and the team that put this show together. Thanks so much for watching. But stay tuned. Up next is the Market Wrap with Agam Vakil.